Hey everyone, welcome to the KE Report and a daily editorial on Thursday, August 14th, chatting with Joel Elconin. Joel is the co-host of the PreMarket Prep Show. Also check out his Stock Trader Network. Both links will be in the show notes. Joel, today we had some inflation data. The PPI came in much higher than expected. And I guess the market was taking notice of that earlier today as everything opened up lower, but now we have the S&P as we're recording this back to neutral. The Nasdaq is a little bit up on the day. The Russell, the small caps are struggling, and that's probably because rates are moving higher today. It all filters into Fed expectations, but overall, also that expectation that inflation will continue to tick up and maybe even tick up quite dramatically as some of these tariffs get passed through to goods that are coming into the country. But Joel, what do you take away from today, which seemed like it could have been a negative day with this higher inflation print, but seems to only be hitting the small caps?
The day is not over, number one. Number two, big tech doesn't care about rates. They got mounds of cash and they don't need to borrow money. They're not interest rate sensitive like the small caps. Number one, so you're looking at the generals in the green, Nvidia, Microsoft, Amazon up $7.50, Google, Meta up $6.50. I mean, it's hard for the market to go down when those stocks are going up. And we know it looked like there was going to be a little broadening of the rotation. Maybe it's sneaking into the IWM a good day. But no, they just go to the well. They go what got them there. And it is, the big tech. So also CPI is more important than the PPI. And that was in line, the highest inflation number in 3 years, and the PPI market's just shrugging it off and is like no big deal, still high probability that the Fed's going to cut in September and maybe October. Some are even saying December as well. So it's the market yet is not yet deterred by one bad PPI number.
Yeah, Joel, you said it. It's really been, as we've discussed with you many, many weeks and months this year, it's a Teflon market. Nothing sticks, whether it's the U.S. attacking another country or whether it's crazy tariff tantrums or concerns about global trade, inflation, jobs numbers that are bad. All of it is a fleeting moment on the chart, and those dips keep getting bought. Everybody seems to be bulled up in almost all sectors here where they're buying the dip. Do you think anything derails this optimism in the market? Is there anything on the future that would derail this rally? Because the propensity of the trend is just to keep blasting higher.
I said last week the PPI or the CPI being hot, but they were mixed. We're in lofty territory. So maybe, China invading Taiwan. I don't know. Maybe, a nuclear bomb going off. I mean, right now there's no you can't fight the market when it's this strong. Now, we're through Q2 earnings season. You talk about seasonality. August, was supposed to be potentially weak. September historically has been the worst month of the year. So a little bit of seasonality here. But when you have, an administration, just greasing the pump, it's hard to fight the momentum. So right now, I can't really give you any. The only thing I could give you is the all-time high and the all-time closing high. I have some indicators that are extended to the upside, but as the market can stay overbought or oversold. Well, that never is oversold anymore. But complacency in the market, sometimes unexpected things happen. But right now, until the big tech turns lower, it's hard to fight this market.
Yeah, big tech just does continue to lead this market, but we are also seeing some of the defensive trades doing okay as well. We like talking about gold. Gold's hanging in there. It's been actually quite boring for the last 4 months, but it's still holding at high levels. Rates, they were dropping there for a while, but now it's still very much a range bound trade for rates. So is there a defensive play outside of big tech, or is it just simply big tech, big tech, big tech?
Yeah, the latter. I mean, if you want to, it's backed off today. If you want one thing to be concerned about, and it's actually down today. The staples are down, but the staples had a good week last week. So I keep an eye on your XLP. It hit a very important level, just under $83, backing off a little bit today. And just going back, I just wanted to mention the gold market here. I don't have the futures, but I have the GLD, and you are forming a wall, an absolute brick wall here of resistance. And I'm looking at the levels here. The last 4 months, that all at 316, 317. So you're forming a monthly wall of resistance there in gold. So keep an eye on that. Trading in the red today. Once again, the market being the market, and just shrugging off the PPI number.
Yeah, it does seem like a lot more of a risk on market. And so gold is more of a risk off asset. And you mentioned Berkshire Hathaway pulling back. That's also another safety play. And a lot of the value sector has been a lot more weak than the growth part of the sector. Now, when you do your shows, when you do the pre-market prep and when you do the stock trader network, is there any questions that your audience is giving you or popular topics that are coming up of areas of interest or areas where there's a disproportionate amount of interest on your show?
Well, what one gentleman has been selling covered calls for a while, and he's ready to throw in the towel. And I'm like, I'm not going to tell you to throw in the towel. The one thing about covered calls is you're capping your gains, right? But if the market really tanks, then you're only protected for the option premium. So that's been a topic. The new IPO bullish was out yesterday. If you talk about all the buzzwords, you talk about bullish, you talk about a crypto firm that is going for digital assets for institutions. Oh my Lord. So that thing priced at 30, 37, opened up right at, I believe, around 80, shot to 118, and then it gave some back yesterday, is down on the day. So IPO, that was a hot IPO was talked about, and I have a discouraged option seller.
What do you think of this IPO market? It has just been on a tear. We keep reading news articles about IPOs that are coming out and skyrocketing on the back of that. This really feels like a few years ago where it didn't matter what came to market, there was money available. We're seeming to be in the same situation.
Yeah, and you could, you can take the contrarian side. Oh, it's symptomatic of a top, but you don't have a top until you have a top. And the only, technical level, like I said, the old time high in the S&Ps made yesterday at 65.0250. You're making a lower high. Well, the day's not over yet, but so far you have a lower high. And let's see where we end the session. One thing that the psych, like the big round numbers, like in the S&Ps, you know how S&P eccentric I am. A lot of times, sometimes you see, consolidation or a poke of, a major level, 6,400, 6,500. Sometimes it just blows right through it, but sometimes it's just a psychological resistance level, and that's kind of what you're seeing today. And yesterday we got just above it. So we'll see. The Bears trying to make a stand, and they get run over every time they do.
Yeah, the Bears have gotten run over by a logging truck this year, so not a great time to be a bear in the markets. But with this bullish IPO, it also brings into the crosshairs the cryptocurrency sector, which is also rocking and rolling. So again, there seems to be a risk-on environment almost everywhere. Any thoughts on the cryptoverse?
Key reversal today made a new all-time high at the futures at 125,200. It's now $7,000 off that. So paying attention to that from the PPI, but the market shrugging it off. So once again, you have an administration fully behind cryptocurrencies, and they're responding in kind. So today could be a warning shot here for Bitcoin, but a lot of speculative fervor in that. We'll see if they just come in and buy the dip.
Yeah, which has happened in crypto too. And this is just one day of weakness. So we'll see where it goes from here. But Joel, anything on your radar that we need to be paying attention to? Because it seems like even, again, the inflation data today doesn't really matter. So what is going to matter for these markets, if anything?
You guys keep asking me, and I don't have anything for you. I mean, if us attacking Iran didn't cause a sell-off in the market, then what is? It's out there. If I see something technically, I could share it with you, but just right now, the bull's in full control.
Well, Joel, in this kind of an environment, it's usually this kind of glad handing and people patting each other in the back that sometimes does mark a top in the market, especially when we're seeing frothy IPOs and meme stocks back in the news and markets at all-time highs and cryptos at all-time highs. And even in our sector, a lot of the mining stocks are ripping up to all-time highs. Is there a point where you would recommend, and I know this is a debate you have with your wife all the time, but pulling some profits off the table? Is there ever a time to maybe go to cash when things look rosiest, or do you think that would be premature at this point?
At this point, no. I mean, let it ride. I mean, as I've been investing for a long time, and it have to pay a hell of a lot of taxes, but I don't think that's a good excuse. But no, I'm not in the stuff that is so volatile, that I'm pretty well diversified. So not necessarily buying a lot on dips, but certainly not selling anything.
Joel, I think that's the most important thing is everyone wants to try to be smarter than the market. Everyone wants to time the market. And everyone does tend to look a little bit negative sometimes at these markets if they're not fully invested, not riding it higher. Fact of the matter is, momentum is on your side, and momentum can just continue. Valuations can just keep moving higher as it seems like more money just keeps coming into these markets. And again, it is tech, but it's also a number of other sectors that are also doing just fine out there. So I think that's the main thing to end on here is that don't always be fighting the market. Sometimes just embrace these higher prices. And when the market tells you to sell, when it does roll over, well, you can be nimble and sell, but don't try to pick those tops, I don't think. Again, Joel Elconin, co-host of the PreMarket Prep Show, also the Stock Trader Network. Click those links in the show notes to follow along with Joel. Joel, as always, thanks for your time today.
Okay, thank you.